How small apartment investors can review insurance policies for key coverage components and exclusions. Identify key coverage needs. Property coverage. Ensure property insurance covers common risks such as fire, theft, and vandalism, as well as any specific risks relevant to the property's location, such as earthquakes or hurricanes. Liability coverage. Check for general liability coverage to protect against tenant and visitor injury claims, property damage, and legal fees. Determine if the policy covers medical expenses, legal defense, and settlements. Loss of income coverage. For rental properties, consider loss of income insurance to cover lost rental revenue if the property becomes uninhabitable. Verify the types of events that trigger this coverage, such as fire or flood damage. Review sample insurance policies and policy limits. Analyze coverage limits. Review the maximum amounts each policy will pay for property damage, liability claims, or income loss. Ensure limits align with the property's value, projected rental income, and liability risk. Evaluate deductibles. Understand the deductible amounts for each policy type. High deductibles lower premiums but increase out-of-pocket expenses for claims, while low deductibles increase premiums but reduce immediate costs during a claim. Assess exclusions and supplemental coverage needs. Review policy exclusions carefully to identify gaps in coverage. For example, if the area is prone to floods, consider purchasing flood insurance separately. Identify essential and optional coverage components. Essential coverage. Property insurance, liability insurance, and loss of income insurance are foundational policies for most apartment investments. These policies cover common risks and help maintain financial stability. Optional coverage. Consider additional coverage options such as umbrella insurance for extended liability, equipment breakdown coverage, and landlord-specific policies that cover tenant-related risks, like tenant default insurance. Legal and regulatory compliance. Ensure the insurance policy complies with any local or state requirements for property owners, as certain policies may be mandatory in some jurisdictions. Consult with insurance brokers or advisors. Policy comparison. Work with an insurance broker to compare policies from different providers. Brokers can help explain policy terms, exclusions, and limitations, ensuring investors select policies suited to their unique needs. Evaluate policy updates. Regularly review insurance needs and update policies as property values or market conditions change. For example, after renovations or market shifts, adjust coverage limits to ensure adequate protection. Additional tips for effective insurance coverage and risk management. Bundle policies for discounts. Consider bundling multiple policies with one provider to obtain cost savings, especially if owning multiple properties. Document property condition. Keep detailed records of the property's condition and maintenance, which may support claims if damage occurs. Reevaluate coverage annually. Reassess coverage levels and exclusions each year to ensure policies remain relevant to the property's current condition, market value, and risk factors. Summary. Insurance coverage is a key component of risk management in apartment investing, protecting investors against property damage, liability claims, tenant disputes, and income loss. By carefully selecting and reviewing insurance policies, such as property, liability, and loss of income insurance, small apartment investors can transfer risks and safeguard their investments. Reviewing policy coverage, exclusions, and limits enables investors to build a robust insurance strategy that provides financial protection and supports long-term investment stability.